Happy Friday, everyone. GameStop stock is now down 26% as of this morning after GameStop announced plans to sell 45 million shares into the public market. This combined with GameStop lowering their Q1 revenue guidance of to be $882 million compared to the $1.2 billion from last year's Q1 in 2023. This is lower than expected, and this will likely push GameStop lower today, in my opinion. It remains to be seen whether this might be actually a buying opportunity for the Apes, considering the drawdown in GameStop stock price since Tuesday. Monday was a huge run up and into early Tuesday, but there's been a sell-off since Tuesday with GameStop stock. So let's see if the Apes come in and buy the stock at lower prices. GameStop stock is only up about 15 to 16% so far this week. So in my personal opinion, I'm not buying GameStop stock. I don't really see the fundamentals in the company, in my opinion. But let's see what the price action is for the stock. I also wanted to talk about the new stimulus announced by China to support their slumping housing and property market that we've seen in decline over the past couple of years. They're announcing $42 billion of state funds to support their housing sector by buying unsold homes to ease their oversupply issues. This should help distressed property developers. And they're also lowering down payment requirements. And this is stimulus to the housing market, which should honestly help the Chinese economy. We saw Chinese housing numbers decline month over month pretty sharply from March to April. So hopefully this stimulus will help the Chinese housing market and economy. We saw billionaire investor David Tepper announce plans in a filing that he bought Alibaba stock, taking advantage of beaten down and undervalued prices for that company. And I wouldn't be surprised if we hear more about well-known investors trying to pick up beaten down stocks in China, and especially now that more stimulus is being released. And then I also want to talk about Walmart earnings. They beat their Q1 revenue and earnings per share, and they issued pretty great guidance. And their e-commerce sales were up 22% year over year. And another thing in their earnings was that wealthy consumers who are taking a little bit of a hit in their economy, they're actually shopping down more at Walmart because prices of goods are cheaper, and they're seeing a lot of shopping by wealthier consumers right now, leading to pretty much an increased demand more than usual at Walmart. So Walmart's faring pretty well. They see, consumers being pinched a little bit, but their earnings report confirmed that Walmart's doing pretty well right now. And then the next catalyst for the market, I think the market will probably, there's not too many catalysts in the market until next Wednesday when NVIDIA reports their first quarter earnings. And NVIDIA stock was declining up until a couple weeks ago. And then NVIDIA stock is continuing their rise. It's consolidating now, I think, about the $950 level, but there's a lot of hype with this Q1 earnings report. And I think that'll be the next catalyst to see where the market will go, in my opinion. If NVIDIA earnings blows past expectations, then I think NVIDIA, obviously, and the NASDAQ should do well. But I also wanted to go back to the Chinese stimulus that I just spoke about. That stimulus should help. That pretty much means that there's more liquidity in the market. And that should help stocks, tech stocks and NASDAQ stocks, but also gold, silver, and Bitcoin when there's more liquidity coming into the market. So let's see what happens for next Wednesday's NVIDIA earnings report. It's going to be a big one, and it's going to be a catalyst for the market's next move, in my opinion.